So, should you be active in your real estate investing or should you look into passive investing? This is something a lot of people are curious about. This is something that I did. I found active investing to be great, but it just took a lot of work. It was too active. And so I discovered passive investing, which involves basically doing work on the front end, vetting a team and vetting a property, and then basically getting very similar returns of what I was able to get when I was actively investing. And so we're going to talk about that today. And I've got an awesome guest who's been through this journey. Camilla Jeffs, welcome. How are you today?
I'm doing great, Bronson. Thanks for having me on.
Oh, really excited to have you. So I want to hear a little bit of your story because I know this is something that you've kind of been through as well, where you've been very active and now you're really pursuing the passive side. Maybe you can just kind of start about how you got started and kind of how you found both active and then passive investing.
Yeah. So I got started in real estate investing really out of necessity. I was young, married, and living in a garage apartment that was just as awesome as a garage apartment can be. and and we were, paying our rent, and our landlady would come around, and I was asking her one day, I asked her, well, how do you buy properties? Like, how do you own a whole bunch of properties? I was curious about it. And as we were talking, she said, what you could do is you could buy your own house. And I immediately I was like, yeah, no, we don't have any money, right? We're both in school. We're young. We're married. No, there's no money. She's like, no, listen, you could buy a house that has a basement apartment in it, and then you could rent out the basement apartment. And then you would be living for actually cheaper than what you're renting out this garage apartment for. And I was like, really? Is that really how it works? And she said, yeah, for sure. So that's exactly what we did. We purchased a property and we rented out the basement. And we lived there for $150 a month. We paid less than what we paid in this garage apartment. And the house
Wow.
had a pool in the backyard. Like, how cool is that? So we got started. And that's when I started really thinking, okay, there's something to this real estate thing. I need to figure it out. And I need to acquire more properties. I knew it was a really great way to build wealth. And so we started acquiring properties, but again, young, no money, didn't know anybody, and we weren't really good at networking. And so we were like, well, let's just buy a fixer upper. Let's just try that. We'll buy a fixer upper. We'll move in and we'll just fix it ourselves because we don't have any money to pay anybody. So that's what we did.
Real quick,
Well,
this is when we talk about the time, or you either have time or you have money. You had time, but no money, but
exactly.
you just had sweat equity and you decided to do it yourself. So that's
Yep.
that's what you did. That's awesome.
Yep. And when you live in it, like it's just always there. You just work on it. And it's not the most comfortable way to invest in properties,
I
but it
agree.
works. It definitely works.
Wow.
And we actually got really good at it. It's called the live-in flip method, where you buy a property, a fixer upper, you move in, you fix it, and then you move out and you keep it and rent it, or sometimes sell it for a profit. Depends on, your strategy at the time. And we got good at this, and we did it many, many, many times. In fact, we did it at least eight times.
Wow.
And we would move every 2 years to get another property, to acquire another property. So we built up this portfolio with live-in flips. And then we also did a couple of other flips. We got a little adventurous and did some flips ourselves and did some small multis. And within there, launched my own property management company. But Bronson, I was the classic DIYer, like literally everything myself. I mowed the lawns. I took the tenant calls. We fixed the toilets. We went and renovated. We turned the units. We did everything ourselves, and we dragged our 5 kids along with us so they
Five
could.
kids. Yeah. And
They
your full-time
could.
jobs and your 5 kids. So anybody who's listening or watching saying, I don't have time, Camilla doesn't want to hear it. Right. And there's other things. You're a triathlete as well. And so just an overachiever, I guess.
something,
Huh?
something like that. Yeah. So it was a lot. And after, 15 years of investing in this way, I got to the point where I was just tired, frankly. I just hit this ceiling where I was tired, and we didn't have very much money, and all of our money was tied up in the properties, and we were just kind of like scratching our heads that what's next? How do we even go anywhere from where we are? Because we had about 15 units at the time and just didn't know how to scale. Um, and as we were looking around and trying to find things, I always had on my vision board that I wanted to buy an apartment complex. I thought that would be awesome if I could buy an apartment complex, then we would be set for life, right? Uh, And then I looked at how much apartment complexes cost and realized that they were millions of dollars. And we did not have millions of dollars to purchase. Remember the 5 kids? Yeah, our money was
Yeah.
headed out the window pretty fast with 5 kids. And so then as I started educating and learning more about how to buy an apartment complexes, I really kind of, my mind wouldn't let it go. I'm like, nope, we're buying this. We're going to figure out how to buy an apartment complex. I realized that you don't buy them on your own, or at least most people don't, right? Most
Right.
people are just normal people like me and you, and we get together in a big group of people and we buy it as a group. And then we all share in the profits, you know? And I was like, wow, this is fascinating. You mean I can purchase apartment complex with other people, right? And own a piece of it. And okay, no, I don't own the whole thing, but I do own a piece. And the crazy thing, Bronson, was that I could do that as a passive investor, meaning I could just put my
Mhm.
money in, but I didn't have to go find the property. I didn't have to like schmooze with brokers. I didn't have to, talk to lenders or even get the debt in my name. I could just simply invest my money, and the returns that I got back, and this is the embarrassing part, were better than most of the returns I got on some of my single families. Like all that
Yeah.
work,
Yeah,
right?
I want to pause you there for one sec because this is something a lot of people, and I had a hard time understanding when I was a single family guy because I had a small single family portfolio, and I had this goal to get 30 houses in Cleveland and get passive income. And I have a cousin who's a multifamily guy. I said, why don't you do multifamily? I said, I don't have the money. He said, well, you can raise the money or you can just invest passively. And people don't realize that when you own a house, and I have a good friend who owns a house in California, it's paid for completely, like paid for outright. And I told him, I said, your cash on cash return on this is like, 3 or 4%. It's really, really low. And so, you're not even using the equity that's there, but a lot of times people don't realize you can get pretty solid double digit returns doing large multifamily. And so whether someone is, if you're watching or listening, you're like, well, I want to invest. I think the better problem, if you have more money than you have time, then you can invest passively. If you have more time than you have money, then you can basically help to be a part of syndications. And I think it really works well because there's an alignment of interests between those two parties. So the group that manages or the individual manager gets compensated based on the performance of the property, which would make a lot of sense if that's the way Wall Street worked, but it doesn't unless you're a hedge fund or something. So it's really amazing how it's set up. So you discovered this. There was an aha moment where you said, wow, this is out there. I can do this. And tell us about like the first experience you had investing passively.
Yeah, so we decided to sell the rest of our properties and roll that money into the passive investing into large multifamily. So there were a couple of things that were hard for me in investing in becoming a passive investor. One was control, because remember, I'd been the complete DIYer, right? Everything myself.
Yeah.
And I controlled every piece of the process. And as a mom of 5, I'm a controlling person. And so like, it was hard for me to kind of give up control. So on one hand, it was hard because I was thinking, well, do these guys really know what they're doing? The people who are running it, real estate professionals who are running the project, do they really know what they're doing? Did they do their numbers right? Did they do their projections right? And is this a good place to invest? But then on the other hand, I was like, yeah, Camilla, okay, you're worried about the control, giving up control, but you're so burned out that you don't want the control anymore, right? Like you don't
Yeah.
want to have to be involved in the day-to-day management of the real estate project. And so it came down to a couple of things. And one was really getting to know the operators or sponsors or real estate professionals, whatever you want to call them, basically the people who are running the project. Um, did they have a good track record? And I kind of went through a vetting process of my own where I wanted to understand who they were, what was their background, what were they doing before real estate, and how did that transfer over into being able to be successful in real estate. Have they already done deals? Have they, what's been their performance on the other deals that they've done? And were there people that would recommend them, like as someone to invest with? So I went through that process. I also went through a process of evaluating the market because I wanted to make sure that I would be investing in a good market. because real estate can be pretty forgiving, even if you make a couple of mistakes here and there, if you're invested in a really great market, because the market will just have that tailwind to just really push the real estate along. So even if you don't do everything perfect, and we all know that a real estate deal will have a challenge, right? We'll have challenges. That there's been no real estate deal I've ever done has been perfect. Some have been better than others, but there's always challenges. But in a good market, it's more forgiving, and you're gonna be able to be successful in a good market.
Yeah, yeah, no, I want to step back to something you said about control. And I think, for a lot of successful people, we've been successful because we've been able to maintain control. Maybe a physician is successful because they can control the care of their patients, or somebody who runs their own business. They've been able to be successful because they've been able to monitor every single level of it. And being the person who's actually making those decisions is kind of like what can make you successful in a corporate career or in a business. And so it's like a totally different almost side of the brain that you're like coming from. It's like, okay, well, hold on, I just invest, and there, like you said, there's this vetting process. But I almost feel like it's, I've had over 1,200 calls one-on-one with individual high net worth investors, and it's like this light bulb goes on at some point. It's almost like a muscle you didn't know you had. That it's like once you actually get some experience in it, and maybe somebody's got a net worth of 2 million or 5 million or whatever it is, and they put 50,000 into a deal or 100,000 into a deal, then like they start getting the cash flow distributions, they start seeing how it works, and then all of a sudden it's like, oh my gosh, this actually could work, and it becomes this whole new option where it's like, 15%, returns in general. That's not unreasonable, and versus looking at stocks or other options, it's kind of this aha moment that goes on, and then it's like, I don't have to manage this, and I don't have to like it's kind of like see people get really excited about it. That's why I get so excited about it. That's why this is the Mailbox Money Show, is because that's what we're kind of helping people to discover. So talk to us a little bit about, a little bit more of your journey and maybe what you've seen, and maybe some guidance for people that are starting out. Obviously, you don't just want to invest with the first person maybe that you meet who does some sort of syndicated multifamily deal. But what are things that you talked about, that vetting process? What are things that you like to, kind of walk through, or you give advice to kind of somebody who's new to this?
Yeah, so someone who's new to passive investing, I really encourage them to get as much education as you can on what the numbers mean. I think when I first jumped into it, I wasn't fully educated. I've been a real estate investor for a long time, but they use different metrics and different numbers and different projections. Like I didn't know what an equity multiple was, because I never used equity multiple when I was evaluating just a single family deal. That wasn't a number that I had projected or knew anything about. And I think it's actually a very powerful number to use when you're looking at a passive investment, because it basically just tells you how much your money will grow over the course of the investment, right? And so learning those terms and those metrics and the what those percentages will be and what that means to you is important as a passive investor, because the more educated you are, the better decisions you're going to make. But the number one thing is not the numbers. Actually, the number one thing is the people managing the deal. And I think passive investors, they'll ask me, well, how do I find people running these deals? Well, and it's not as simple as just jumping on Google and looking for someone on Google. I mean, you can, but how you going to trust that person? Some random person off of Google. So the easiest way to do it is to get out of your comfort zone a little bit and start attending some networking events. And I know so I'm fairly introverted, and it took me a long time to feel comfortable at networking events. But even if you're an introvert, it's good to get out and get to know who the people are, because you establish a better relationship with them. So I would never invest with someone you didn't know, that you had not talked to one-on-one, that you had not had a couple of conversations with, that you had not been following for a couple of months at least, right? Don't invest just because they on paper have this amazing deal that says it's going to triple your money in 2 years, right? You need to get to know the people. And so with the networking, you can ask other investors, find other passive investors, and you'll find them at these events and be like, hey, have you ever invested with Bronson? Is he any good? Right? And you can talk to the other passive investors and get their experiences with the teams. so you can really get to know them. So I think that's number one, because a team can make or break a real estate deal. And like I said before, there's always challenges that happen with it. So one of my favorite questions to ask a sponsorship team or sponsor is, tell me about the challenges that you've had in real estate.
Mhm.
And if any of them say, "Oh, I never had a challenge," you need to run fast.
Yeah.
Because they're lying.
Yeah, I know there's two reasons why people say, "Oh, everything's always been fine." They're lying, or they just have no experience. And so they may not be lying, but
Yeah.
they're also their first deal, and they're smiling. Yeah, everything's perfect in this. So as you know, if you ever, and actually people watching this, if you've been active in any deal, you know nothing ever goes as planned, right? There's something, the plumbing comes up, there's something that the estimate is higher than you thought it was, or you start pulling something off, and then you realize, oh, I've got to redo the floor now or whatever. Like, just
Hmm.
stuff happens. So that stuff happens too, and that's why you account for that in these deals when you look at them. But I think you mentioned something that I think is a real nugget, and I wanted to highlight it, is that when you go to networking events, and if you're more introverted, that's okay. I mean, I lead a meetup in Southern California. There's meetups typically in most major cities. There's also national meetups. And you and I think I didn't get to meet you, but I saw you speak at a meetup in Dallas earlier this year. And it's just a great way to meet other people that syndicate, also as well as passive investors. Now, a syndicator, even though we're syndicators, a syndicator, they sometimes will try to, they have something to sell, right? But a passive investor has nothing to sell you. They're not trying to sell. Hopefully, they're just trying to help and saying, hey, this is my experience. I had a bad experience with this group. I had a great experience over here. And those are really, really valuable. It's like getting a referral from somebody in the same interest, or even like a close friend. So when you get to know other passive investors that have had success, it is very, very powerful. So I love that you shared that. So what about you? Tell us a few maybe mistakes or things, learning experiences that you made along the way as a passive investor.
Okay, so mistakes along the way. So in the beginning, one of my mistakes was not fully understanding what the business plan was. And so there, every time that someone that purchase is made, there should be there should be a business plan about how they're going to either add value to it by increasing the income or reducing the expenses. That's a classic called value add type deal. And I think one of my mistakes was not really understanding the business plan, because when I invested in this, it was 107 units in Arizona. And the business plan said, oh, we're going to renovate the units, right? And that's all I thought about. Oh, renovate the units. Okay, cool. Well, what I didn't realize is I didn't dig deeper into the business plan, because I didn't realize that they were going to take it down to like 20% occupancy to
Wow.
renovate the units, right?
Oh, wow.
Which
Okay.
meant, as a passive investor, that there was going to be hardly any cash flow coming for the first year or so, right?
Mhm.
And so I thought, my initial thought going into this was, oh, I'm going to get all this cash flow, that'll be great, and I'll live off of it. But because this specific business plan took it down to so low occupancy, there was no cash flow. And so it was just something to factor in, right? But I mean, after year two, once it gets fully renovated and occupied, that cash flow is going to be huge. It's going to be a lot of cash flow coming in. And so it's just another factor that you need to factor in as a passive investor. Because if you're looking to replace your income, or partial income or something, and live off of the money that you're doing as a passive investor, just know that the first couple years, the cash flow is likely not going to be super high, depending on what the business plan is.
Yeah, no, it's interesting. You kind of bring up the point or the topic of expectations, and this is something that I think I've realized when there's an issue that I've invested in a deal passively, or we've had of the 1,400 units, we've had deals that we've done where maybe an investor has a different set of expectations. That, oh, I'm going to close on this, and then month one we're going to have distributions, and it's just going to be riding off into the sunset with passive income. Usually, it doesn't quite work out that way. Usually, either as a
No.
passive or even as an operator. So some of that, I think anybody who is active, it's just important to make sure you set expectations really well. I've seen this before. People say, oh, this is like, it's easy both as a passive investor to kind of gloss over, like, oh, this is the plan, this is what it is. And then also even as an operator. But I think just making sure that you understand what that business plan is. And also if you are someone who's operating, just making sure that your investors understand what that process is, and that you communicate
Mhm.
that, you're consistent with that, and you set kind of low expectations. What we do, commonly is like, well, we generally start distributions at 6 to 12 months. It does depend on the performance of the property, and sometimes it's 3 months, sometimes it's over. It takes longer than a year. So it's just, you kind of set expectations that this is kind of what happens. But a lot of times, those are big documents. These are 100-page documents sometimes that have all the PPMs there. Even the presentation sometimes are 30, 40 pages, and so it takes time to really get in and look at it. So I'm really curious too about your biography a little bit as well. So you have 5 kids. You've done, you are professionally. What's your background professionally?
HR for tech
HR. So
companies.
HR. You're a triathlete. You do all this stuff. How do you find time to do? And now you have basically an active real estate business, right? As well. You have your passive and your active. So how do you find time to do all this while having 5 kids? And like, I mean, what would you say to someone who says, "Hey, I'm too busy"?
I magically have more hours in my day than other people. Just kidding. No, I don't.
You don't sleep at all, right?
I never sleep. No, actually, I need a lot of sleep. I get super grumpy at nighttime. No, it's just a matter of prioritizing. I think when you have a lot on your plate, you get really good at prioritizing and focusing on what really matters, instead of kind of, I think we all have time wasters in our lives, that things that suck our time, that aren't necessarily good. I mean, they might be good, but not important. And so it's just a matter of figuring out in your life, what are the most important things? What are the things I must do every day to move forward? And I think for me, in the investing, I had those, I knew I needed to learn something new every day. Right. And so that's one of my number ones was learn something new every day. Number 2 was get to know somebody new every day. And so with those 2 things in the investing world, if you can implement those in your life, you will go far for sure. Because either people or education will open doors for you. And then also, with family, in regards to family, we involve our children in everything that we do, right? It's not that mom does this investing thing and the kids don't know about it and they have no clue what's going on. No, we have very conversations. We hire our children to do work for us in the business. Our last live and flip, the kids did a ton of the work. They all can tile and sheetrock and, like lay flooring,
Awesome.
cabinetry, you name it, they can do it. And then we pay them for that. And then we use that money and we invest as a family into another investment. And so they are active investors, and they're also earning their own passive income in other investments. And so it's everybody's involved. It's not a this or that type thing.
Yeah, that's great. I love that you're involving your family in it. I think it's really a good thing too. If you have a family mindset, a lot of people kind of don't do real estate, or they don't get as involved as they'd like to, even passively, because maybe their spouse isn't as much behind it. I think there's things that you can do to educate your spouse, or try to bring your spouse or your kids and get them involved. But I love that your whole family's really involved in it. And you mentioned something really critical, I think, to every, whether you're active or passive. We call it, networking and education. You learn something and you meet someone, right? Like you never know who you meet when you go to a meetup. And yeah, you're tired on a weekday, you've worked, it's been a busy week, it's a Thursday night, but you get out there and you meet somebody and you learn something, and it's really, really valuable. And I think those are the 2 things that really, for me, have gotten me to the next level. And they say how you treat your network is how you develop your net worth, and it's really true. So you develop that as you kind of go about that. So I guess I wanted to ask you, as we're kind of wrapping up here, what are you working on now? What are some things? I see Shady Stream there. What are you working on with Steady Stream? I'm sorry.
Steady Stream Investments. Yeah. So I mean, I was so excited about passive investing once I found it. Right, it took me 15 years to figure out there was a better way. I was just so excited about it that I was like, I knew that there were thousands of people just like me who have been in the landlord's log for so long, the DIY mentality, and they needed to learn about this this better way to invest. And so I launched Steady Stream Investments as essentially as an education company to educate more passive investors on how to get involved with it. And then I also will go out and help vet opportunities and vet sponsors and vet markets for passive investors. And so, so I'm always working on a new deal, and I'll join as a general partner on the team and help with the asset management on the back end. So working on several multifamily deals in the Arizona market and Oklahoma markets. Those are my two favorite markets right now. Although I live in the Dallas area, but I've only lived here for about a year. So I'm just getting to know this market. So next year, hopefully to, get some Dallas assets also. And then the other thing I'm doing is actually working on an assisted living new construction, which is a really fun, interesting project to be involved in. That's here in the Dallas area.
That's awesome. I think as an investor, passively, actively, just when you're learning new things, you're discovering new asset classes. I mean, real estate is, I like real estate because of what it does for me, right? And I like multifamily because of the tax benefits and the returns and other things. But there are other types of real estate, even other types of things outside of real estate. I think that's why the educational piece is so important. And even the people you meet, and you're like, oh, how do I do that? And then they tell you, and that's educational too. So, well, Camilla, I wanted to just celebrate you and just appreciate all the ways you've added to the conversation of just really becoming a passive investor. I think passive investing has become something more people are becoming familiar with, and I think owning a house and running it yourself is not a passive investment. And I tell people that, and it's like, that's not passive investing, but people think about this as real estate. I'm gonna buy a house, I'm gonna flip houses. It's great. It's definitely active more than it is passive. But when you can actually become passive and you see all the benefits, and you've done that very successfully for a long period of time. So I wanted to really thank you for sharing your experience with our group today. But how can people reach out to you if they want to learn more?
You can just go to my website, camillajeffs.com, and I'd be happy to connect with anyone, or connect with me on LinkedIn, Facebook. I'm easy to find with my name.
That's awesome. We'll put a link below as well, or in the show notes, so you can check that out. But Camilla, thanks again for coming on. Really appreciate you, and look forward to connecting with you soon.
Thanks, Bronson.
So this topic is near and dear to my heart. I thought in order to become wealthy, like a lot of people do, you've got to go out and buy a bunch of houses, or you've got to do all this stuff yourself. And maybe someday, if you get a bunch of houses, you can graduate to multifamily investing. But Camilla shows as well that you don't need to do that. You can basically start passively investing. There's a lot of groups that, for 50 to 100,000, people get into a deal and kind of watch and see how it goes. And in general, it tends to work out okay. Obviously, there's risk to every investment. You want to do your own diligence. We're not, saying you shouldn't, or they're, giving you any specific advice. But in general, really going after passive investing is phenomenal, because what happens is you regain control of your time. A lot of people that I know, and you may say this as well, that I just can't see owning another house or another duplex or another 5 or 10 unit. It's because you're not passive, even though you're not the one who's actually operating the property. Maybe you have a property manager. They're still looking to you saying, hey, what do I do? Do we replace this? Do we move the tenant out? What they're asking you for day-to-day stuff. That's not passive. Passive is literally you invest, you vet on the front end, and then you just get the checks. And so that's why this is the Mailbox Money Show. So if there's any episode that really, I think really defines, what we're doing here and what we're trying to teach people and try to teach you to do, is to really passively invest. It's this episode. So please share it. Love to hear any feedback that you have. We'll look forward to seeing you on the next episode.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.